Hello, guys. Welcome back to my channel. Hello. Did you catch that move? Jason A. Jason Abalos of PBB. Did you catch that move? Jason, I follow your suggestion. I'm on break even now. Hi, shout out to Alan Zambrano. Hello, brother. How are you? Nice meeting you, my friend. Where are you from? Shout out to Pauline watching my. Hello, guys. Got some practice. Hello, Nergibatar. Thank you for tuning in, my friend. Uh, I'm trying to win back my loss yesterday. Everything is good. Everything is good. Best way to break even. I'm already on break even, but I think I'll cut my loss. I will put my entry in 290 is good. Gold, gold. I have nine. I think gold will. I think gold will go up. What do you think? I'll make a pull. Let's see. How do you think? Mag pull. How to make a? I don't know. Moderator reaction. Participant. One, two, three. Okay. 650. Let's see. Okay. To those who who's new here on future, I will like give you a rundown on what is future trading and how will you leverage or get some from future trading. Yeah, you told me to check the gold, so I checked the gold and actually my entry here in gold, this is a perfect optimum entry and I will explain to you in a while based on this strategy. But I just before I will explain my strategy, I want to know of my 9,000 viewers who is new to future, and I'll give you a rundown quick a quick one. How about you, Alan Zambrano, my buddy? Are you new to futures? What are you trading? What market are you trading, my friend? Jason, yeah, gold. I think the best setup for gold is 5 minutes. 5 minutes time frame is the best for the gold. So by now, if you are a gold trader, this is your entry. Uh, I'm I'm expecting we will have let me see. Yeah, this is the best entry for gold right now if you want to enter this gold market. We are on the fair value gap. And the fair value gap has a volume imbalance where the price right now. This is a volume imbalance here. And I like if the fair value gap has a volume imbalance because that's a strong fair value gap and you see it's trying to fill the gap. I will enter one more position on the gold market for a buy. Let's see. And then I'll keep this 290. If I hit this stop loss, I'm good with that. Uh, but I'm hoping for the gold to hit 284. No, we're high actually. So 1:2 is decent. 1:2. So my entry was here. Think I think let's see, $800. $800 is a good one. Ah, yes. Okay. We're still running. Market is good today. Market is good. good. So, all right. So this strategy doesn't work all the time, but if you will able to spot the perfect stop, perfect, perfect. I'll set this aside and I will show it to you. So it's been a good market since the opening for the Nasdaq, and I will start at 15 minutes. You see the Nasdaq. This is the opening. This is the opening gap. So we have a end dog, new gap opening, or new day end dog, new day opening gap. So this is our new day opening gap, and the price didn't go back to this new day opening gap, and I'm expecting tomorrow morning on New York session we will see the price will be attracted to this gap, and maybe trying will go back to this psychological level, which is 20,700 psychological level. So psychological level is where people, most of the people psychologically put their order. So if you are a stock trader, usually you put your order, right? You set your buy or sell on a even number like 700, 500, 400, 450. So that's a psychological number, and in my theory, psychological number is strong. Uh, it is always strong. We are unconsciously like ignoring that, but a psychological level is a strong level. So like for example, if you're buying for a stock like Apple, you always want unconsciously you'll put your order like, okay, I'll buy stock shares on a price of 200, on a price of 100. We don't usually put our order on a price of like 221, 223. So that's a unconscious, like a human natural mind that tells us that we're more fun on a easy number. We love easy number, which is 500, 400, 450, something like that. So I know you understand what I'm trying to say. So I'm I'm hoping maybe before the week will end, maybe we will see the price will go back here. Uh, right now we are in the all-time high for some, and I put another psychological level on 280 because this is a new target, and maybe some of the holder of a stocks, because we're talking about indices, so this is a stock market combination of like a multiple stock market. It's a Nasdaq. So I'm guessing that once we hit 20,800 we will see some pullback or most likely sell out. We don't know, so I'm just speculating. So analysis that's my analysis on the market. And if you look at the stock market, we are all green today. Take a look at Nasdaq. I think take a look at Tesla. What is the runner today? We will see that. Go to TradingView and we'll see who's gainer and who's like, yeah, the blue chips are starting to, going green. So this is what drives this in this like Nasdaq to go up for tonight. And there is a strong Asia sentiment for buy because of this news here. It's a good news. See, so this what drives the market tonight. These three news that was on 8:30. It's because of this one, and then we're expecting later on at the London opening we will have a high impact, and we'll see the market will go up probably. So all of the red are high impacts, which creates this move. So if you are new to trading, these candles, we call this a Japanese candle pattern. So we don't we often ignore those basic like trend lines, moving averages, and support and resistance and candlestick pattern. But uh, if you want to learn how to trade, that's the most important that you need to learn. You learn that, and then you will able to trade good. You don't need a fancy strategy, and you don't need like those be beautiful beautiful strategy to trade. You only need the fundamentals. And my strategy here, in order for you to learn this strategy effectively. This indicator will not do anything if you are like you don't understand price action, market structure, candlestick pattern. So you will not learn, you will not able to use all of the indicators that it's on your chart if you don't know basic of trading. Earlier, I did a live, and one of the viewers there told me that uh, he lost or he blew his account because he's following my strategy. And I told, and then he said, I sell, and I don't see a sell setup there. But and I told him maybe it's on you, brother, because yeah, a strategy is always there's a lot of strategy, but you know the one of the weakness of the strategy, which is the the main weakness is the user, where the weakness of the strategy. So yeah, so this strategy, in order for you to perfectly execute this scalping strategy, you should have the basic understanding of the market, market structure, price action, and candlestick pattern. And then I will we'll see. So earlier I trade here, and I had this move on my real account, and I have a multiple entry. Actually, started from here one, and then I entered here again, and then entered here again. I got stopped here, so I have like two trade with one stop loss, and I'm still even. So let me show it to you how this trades works, how this strategy works. So my strategy, to those who news here, and I think I have some new viewers around. Welcome, welcome to my channel, Alan Zambrano and Lester Pakingan. Uh, and there's also Jason A here. I think, oh, he's out. They're watching right now and trying to learn. So this is a future trading. And if you are stock traders, maybe uh, you can trade good on futures if you are a stock trader because the basic, you know, the fundamentals is stock market, the analysis, the macro, everything like that is, you know, it's easy to understand. So we'll start from here. I'll go on 15 minutes. So usually before 7:30, I put my chart to 5 minutes. So I'm just scalping. So I start scalping when 7:30. I'll start hunting. 7:30 is my the start of my, you know, Asia pre-range, which is I start hunting a setup, and at 8, which is the Asia market opening. Uh, it's where hoping to have a big move, but on this case, we we open here. Market future markets at open as 1800 or 6 p.m. New York Standard Time, and we have a very good we have a gap here. So that we call this new day gap and new day opening gap. And this is if you are trading stock market like or options. Um, I love to have this, and like if you're not day trader, you're a swing trader. This will be your take profit or your point of interest for take profit. So maybe later, once we see some reversal, I'm s- I'm expecting that the price will fill this gap. So a gap like this, the price will always fill the gap. Will always fill the gap. No, not now, maybe later, maybe tomorrow, but the market will always go to this gap and fill this gap. So we don't and this gap here, why we have a gap here? This is the meaning of this is like we don't have a trading activity on this time of this gap. So this gap is take a note of this gap. It's always important if you wanna like put your order to buy maybe here, or if you are selling and you wanna you wanna take your profit here. So this is a good area to. So this is some of the basic market analysis that I learned. Of course, another. So if you believe that the candlestick pattern or the is algorithmic, because for me I do believe that this is algorithmic. Algorithmic meaning will have like the movement will be the same. Uh, like for example here we are consolidating here. This is a consolidation. If you under so consolidation is like a you know just a what you call it, horizontal move. So why we are consolidating? Meaning we are on consolidation because the people are not mm, they are not yet decided whether they buy or they sell. So no one is moving the market because no one is selling big and no one is buying big. So we are consolidating. So other term for that is we are if if you if you have like one candle, like a candle that forms like this, like a cross, this candle we call that an indecision candle. Indecision. So people are undecided whether to buy or sell. And if you put that group of like this, so we are what you call that? We are in a consolidation. So people are not really they don't know if they will buy or they will sell or maybe they were waiting for because we have a news earlier. So they are waiting for the news to happen before they will decide. And of course, the market will move even though no one is moving it because it's an algorithmic and it's a pattern. All right, that's the only thing. And this move will we will see some like a trend up and trend down once people like start to sell or buy. So that's why we have a market move. So uh, that's and then one of the best I think one of the you also need to understand or spot uh, what we call consolidation, manipulation, and distribution. And here we have one that I can consider, like for example, this one here, uh, this one here. This is a good example. We are consolidating, see, and then we have a short manipulation and then a distribution. So if you spot that, uh, you're good to go. I mean, then now you need to learn also market structure and price action, and which is really important. So let's go here to this. I'm discussing this briefly because I want you to learn that before using this strategy that I'm using. So this, well, let's see the price action. What price action that we have here? So first, we are consolidating, and then here we have a manipulation. So this manipulation, a manipulation will always create uh, break of structure or market shift. Market structure shifts from in this area. We have a market shift here, market structure shift. You see, so this is a market structure, meaning from this short bull momentum, someone sells and then created the market shift. That's another term for a price action and market structure, market shift. And this market shift created an inefficiency or a gap, which is this is the one here, this gap. So the gap here meaning seller are stronger than the buyer, so meaning we don't have a buyer here, that's why we have a gap. We don't have a buyer, that's why we have a gap. That's this is a market structure, basic market structure. Then and this candle 1 2 until here that created this gap like this one here. So from this candle, 1, 2, 3, that created gap and caused market shift, we call this a displacement. So this candle, a group displacement can be a one single candle or group of candle, but this one is a displacement candles. Displacement candles cause created fair value gap, bearish fair value gap, and then a market structure shift. So uh, that's so that's a basic market structure and a price action. It's a basic. All right. Now, if you learn that, then I think you're somehow good to good to use this strategy. I think. Let's see. Let's go back to my trade. What's going on? So right now, this is a fair value gap. Example of fair value gap, failed fair value gap. This one here, example of high probability fair value gap. This the one where I took my entry. At this time, market is consolidating and people are undecided. So um, I put my stop loss there, here, and then okay, I'm out. Positive 260. Let's see. I'll take my. I'll keep my gold actually. Well, I'll get this because it's already 10, and I'm all right. I'll cut the lesson because I'm going to enter here. All right, let's observe this market. I'm good with the gold. To the gold. Okay. I think the gold will consolidate until 12 midnight. We'll see. Uh, so we're done with this trend. So this is an example of a high probability fair value gap. There's a lot of fair value gap which is high probable, but this one is it's my favorite. And you don't see this often, especially on New York session. So what makes this fair value gap special is the presence of this imbalance, volume imbalance here. So we have two volume imbalance. I do not like two volume imbalance because price will tend to feel that imbalance before going to the right direction. So, but I was confident that this fair value gap will support will strongly support a bull because of the indicators. The indicators is telling us that we are a trending market until here. So that's why I took the entry earlier here, and I just recently got my you know a profitable stop loss, profitable because I scaled my stop loss. So it's really good. So if I see this fair value gap, my entry will always here at the bottom, not on the middle, not on the because of this inefficient volume imbalance. And we are not like a volatile market today, so the tendency, the price will always feel that. And then yeah, this is where I have my. It's a good one. It's a good trade. I was able to like uh, break even and take some profit, like 600. And also same what happened to the gold. It's a beautiful fair value gap, a high probability fair value gap. Market tried to stay there for a while before going up. Uh, and I'm just afraid to trade this gold because it's already high on a 5 minutes time frame. And even on a 15 minutes time frame, it's already on the high side. I'm just afraid of a sell out. Same with the Nasdaq, but I think there's a possibility that the price will try to reach this 20,800 psychological level. There will be a big possibility, but of course I'm not sure. I'm just speculating. So now that you have like a little bit of the price action and market structure that I'm using on this strategy, let's go to this strategy, and then everything actually is on the description, and then that's how you use it. Now, uh, if you're using this strategy, if you can like trade like a robot, then trade like a robot. You should be like you should not add emotion. And the moment that you become emotional, this strategy or this indicator that we're using for this strategy will be invalidated. And that's where I lost. Sometimes, we're human. We cannot. It's impossible to not get emotional. So that's the problem. And that's as a trader, that's what we are trying to uh, beat, or that's what we are trying to. Uh, we don't want that. Uh, Hi, Ngenta. Ngenta, thank you for coming back, my friend. All right, go ahead and take care of your kids. Thank you, my friend. So yeah, so I think it's 10 p.m. It's the end of my trade, and I need to go to sleep. So this one is a very good trade. I'll take. Um, we're done with this. This one is a beautiful trade. If you were, so you see, that's I don't trade before 7:30 because of a movement like this. So if I trade this one, most likely my entry will be here. Most most likely my entry will be here, and stop loss will be there. No, move. Most likely this will be my optimum entry. My stop loss is here. That's why I don't trade this because you see this move. This move will stop you. But it happens anywhere on the. But I just don't trust the before pre-Asia opening. But I love to trade 7:30 in there, and then we have a very good multiple. So on this strategy, what happened is we cross first like the blue one. The blue one is the moving average 9, and the green one is exponential moving average 21. So super trend, I love when the market do this. Super trend was like first to support bull before our signal to buy, and I love when the market does that because it's a strong indication of a bull market, like a strong bull market or strong trend market, and I love that. Uh, Same as the here, but this is a sell out. Then we cross, we created, we have a displaced candles. Although we failed here, but uh, you see this candle, this is a strong resistance, but failed resistance to this level, and then we break that, we break that level, and that I will consider that a market structure shift. And then we have displaced candles, and then we do have a high probability fair value gap. It's a high probable fair value gap. You see this gap here? That's a high probability fair value gap, and within a minute, we tested and rejected that fair value gap. So we have here a opposing hammer and this fair value gap. If I see that, and if I miss this, if I miss this one here, I'll put my entry, and that's what I did earlier. I put my entry on the base of the fair value gap because I already missed that rejection, and that's maybe we will not the price will not retest this again. But uh, you don't need to put your order limit here because this will happen within 2 minutes. And once I have that, so because I have this fair value gap and tested within a minute with a strong rejection and a beautiful opposing hammer hit, and then we have the first red candle that will hit this fair value gap. I'll take that as my entry, and I will target 1:2. I'll put my stop loss here on the first fair value gap, and I will take 1:2 as an initial take profit, 1:2, like that. And then I will wait, and you see we are consolidating, and I know why, because of the news that was about to happen at 23:30. So I will wait. So this will be my first entry, and uh, I will, as long uh, as the market will not invalidate this fair value gap, I will not exit the entry. But the moment that the price will reach, like, dissolve this fair value gap, I will exit the entry no matter what. And I'm doing that most of the time, if you are watching my live. So this is my first entry, and then my second, I will add a trade once I see, you see this? This is what I do most of the time on my trade. When I see this, like we break a structure. We have a breakup structure here. So meaning, uh, we break this structure, break this new high. It's indication that the market will continue to go up. So this is the part. This is part of the market structure analysis. And then not only that, because that breakup structure leave us this displacement candles with that breaks this structure. So they're almost similar. The only difference between market shift and breakup structure is market shift cost shifting of the bias. Breakup structure is just cost continuation of the bias to bull side. And then we created fair value gap. And the moment that fair value gap is retested, I will add another trade because I'll add another trade to my trade already. I don't that's what but on this trade that I have, I did not do it because I was driving. And of course the it will just add there. Stop loss is always be on your stop loss. But the moment I have this one, I will scale my stop loss. Like for example, scale my stop loss and I will put it here. Scale my stop loss and let's see. The moment I have a breakup structure, I'll scale my stop loss and put my stop loss on the first candle that created fair value gap on this displacement and that causes breakup structure. So this will be my new stop loss after that. Uh, SL. So that SL is not only you break even, you're already profitable with that stop loss. That's my first one. That will be my stop loss, a profitable stop loss. So now you are not afraid to go and continue the trade because if you hit your stop loss, you're already winning. And if you are not greedy, that's okay because that win is win no matter what. If $5, $10, it's still a win. So yeah, $10 in every trade is okay. Now, uh, on my trade earlier, I add, and then after that, uh, here, what happened? Uh, I add, and then I, right after I add, I have this. I end my trade here, on this here, because the blue line crossed the red line, which is indication one of my criteria to exit the entry. So I have this trade from here with additional, and then I exit here. So I did not do live earlier because the market is beautiful and I want to like focus. I want to focus. Uh, yeah. Did I? Yeah, I add here. So this is the one that I did not. So where is it? Yep. I add here. So I was not doing a. Sorry. No, I didn't add here. I forgot. I did not add here because I was not around. I was driving. But what happened is if I'm sitting, I will add on this area here. But I closed my trade, the trade that I have here. So that's where I close my trade, and I have like 3.7. 1 is to 3.7, almost 4. And then this happens, and I thought it will be like a reversal because I'm hoping for a reversal because it will be so. I have this set up. It's an entry for me. It's a go signal to sell. So I sell earlier, and then uh, my entry was here. I was hoping for the market to. I thought it's too early to hope, right? I was hoping that the market. Okay, this is a signal that we will have sell out and try to. Because sometimes market always do that on Asia, like before 12 midnight, we'll try to fill this gap. So I was hoping for that. I put my stop loss here, and then I got stopped. I got stopped like within 10 minutes. I got stopped. So I'm okay with that. And after that, okay, I said I'm done. I'm done trading. I have a good profit already, even though I got stopped. And it's a little like it's only like 150, and then it's fine. Then after that, we reach home, and then and then I open my combines, and I saw this one here, eh, this one. Another break, another market shape structure caused by this beautiful displacement. Because this beautiful displacement, the market structure is just on the middle of the body, and then we have a volume imbalance, we have a fair value gap, and the fair value gap sandwiched by the volume imbalance, and it's beautiful for me because the market is trending up, and I put my entry here earlier. If you can see, I think here, no, on the middle, and then I was stopped here. I scale my stop loss for, so I have like 628, and almost the Nasdaq is almost identical with the gold uh, gold market structure and price action. So I also took some entry here on the gold, and then I have this 628. So 628 is a good, it's a good profit on an Asia market. Yeah, not yeah. If you agree on me, so that's okay. Now, so that's how you trade. This is strategy, but it's not always a win because as you can see, I have like one loss in there. So this is 2:1 trade on this strategy or this scalping strategy. Now it's 10 and I'm done. And thank you so much for watching. I hope you like my strategy. It's time to sleep. Family time. Good night. Good night, people. Bye.